Hello everyone, welcome to Yara Trades. Today I'm going to do a simple video on how do I draw my levels. I do not use any technicals, that's not part of my trading strategy. If you use technicals and it's working for you, then that's fine, they're there for a reason. But I choose not to. I did a poll on Twitter and 50% of the respondents say they wanted a video on my level, so I'm going to make this really short video. If you have seen my last trades in the last week, I have traded a lot of Apple because Apple is giving me the reason to trade it based on the levels that I draw. There have been times that I trade Tesla a lot, or times I've traded NEO. Now, last year I traded NEO a lot, but this year there hasn't been one reason to trade NEO because NEO is on the downtrend. I don't like to short. I am a call buyer and I wait for the setup that pertains to my specific strategy. And it's so important to have a strategy, but that's a different video. Rules, another video. So let's talk about Apple really quick. Let me turn off my camera so y'all can see the chart better. So I'm going to start in the 1 year time frame. And you can see here, especially my style of trading, to see the charts better, I draw key levels of support in green and key levels of resistance in red. And for those, to me, are key levels. You can see Apple in the green. You can clearly see that the stock had rejected it here. This goes back to 2021. Support now, a rejection become support. This back then would have been a great break and retest. Here it held it again, and here start rejected it. Now we did not see it move up for, oh my God, for almost like a whole year. And now it broke above it. And now it started to reject it, reject it. So 4 rejections going back to October 2022. So that to me is a key level. Now resistance. Well, if when the time frame that Apple broke above, where is the next key level in the yearly chart? Well, you can see a gap here, but ultimately you can see a hard rejection at the 263 level, and then you can clearly see here that it has supported it. So support became a rejection. So to me, that is a key level in the longer term within Apple. Now that I know that and I've drawn those levels, I'm gonna go into my 15-minute time frame, and you can clearly see the levels in here, right? As a matter of fact, if I go a little further, you can see that two late rejections here that are so crisp and clear on Apple. Or obviously going back to the beginning of the year, February. This is early this month, and here we are. So here's my strategy comes into play. I play the break and retest strategy. So I am on a wait for the break, and here's a retest. And this is one of the trades I took earlier in the week or whenever this day was. I've been trading Apple lately. So then I have something called micro levels. Micro levels are levels that are baked in between these two key levels. So when Apple broke and retested that 156 key level, then I drew another level because you can see a rejection here, a rejection intraday, and then it broke above it. So when it broke above it, now I'm waiting for the retest of this level. So the next day, it kind of ran up in the morning and it retested it. I bought this as well, and then it went higher. Now the next day, it created a new level. The new level for me was going to be right here, the previous day close. So it overnight it went lower, it broke above, it retested it, and this is my $1,700 that I made yesterday, and then I sold off here. And then I have a new level, the 160 level. Why is the 160 level so important? Because when you look at the chart, the 160 level, it coincides with two rejection candles right back here in 2022. So I reverted into my 1 year chart just to get a verification. And here we are, the 160 level right here. So this morning, here we go. So I'm sorry, I lost myself there for a second. This morning, the 159 level, it gapped up, It flushed down, but it broke above it. That's today's trade that I traded 4 contracts. So now we're at the 160 level. It broke above. Now it's currently trying to retest. Now, if you're trying to get in now because retesting it, now is the wrong time to get in because you're working in the middle of the day where volume is lower, and as a matter of fact, it is starting to fail this level. So although I do break and retest, but I'm not going to break and retest a trade when volume is low and we're in the middle of the day and it's trending lower. You know it's trending lower because if you zoom out a little bit, you can start seeing it in the 60-minute candle, right? So that's why traders usually have 2 or 3 charts going because now you can start zooming out in different time frames. So when am I going to buy Apple again? Well, I need to wait for a break of the 160 and a retest. So obviously it runs up to 163, which is that key level of resistance. Now, when it gets here, you can expect a lot of shorts getting in because in their eyes, that's a level that they need to get in. So you need to think how the market thinks. If you're a call buyer, you need to keep in mind what shorts are thinking, right? You gotta look at the psychology of the opposite team. So when this happens, I'm gonna be waiting for it. It doesn't look it's gonna happen today. Maybe tomorrow, the market gaps up, and if the market gaps up, then you can actually wait for the break, retest, and move higher, right? So let's say the stock obviously rejects here in the 163 level. At some point it will. And I believe when it gets to 163, there's going to be a hard flush because it's a key level of rejection in the yearly chart. So I'm going to wait for it to break, retest, and then I'm going to take it higher. So as long as the stock is giving me the opportunity to do so, I'm going to keep hitting the same stock. Now, if Apple decides to obviously crash to the bottom of the earth, right? And then Apple does this, then I'm going to look for some other stock to trade. So that is my strategy, is a break and retest strategy. And I go with the flow. And that has worked for me. I started trading 2020. I got furloughed from work. I worked many years for a big hotel brand. And at the beginning, I had every indicator on earth. But then when I started taking them out, I started to see the chart. I started to see these formations. And I started to understand the psychology of market structure. Hopefully this video works for you. If you like it, hit like and subscribe to my channel, please. Okay? Till next time, may the market be with you.